Number 8. The bank statement shows a credit with regards to interest, 920 Rand. First of all, you need to know that a favorable interest, which is a credit interest, is known as interest on current account. So the two ledger accounts involved will be bank and interest on current account. Bank is an asset, interest on current account is an owner's equity, and they both have positive effects. So let's go and record that onto our answer sheet. So for number 8, the account to be debited is bank. The account to be credited is interest on current account. Assets will be debited with 920 Rand, and owner's equity will be credited with 920 Rand. Number 9. Receive a debit note from the bank relating to a rejected debit order from a debtor for 2,400 Rand. Previously, he settled debt of 2,900 Rand with this debit order, and the transaction was wrongly recorded in the cash receipts journal on that date. So with this entry, it's going to involve two transactions. The first transaction will be recording the rejected debit order, and then the second transaction will be to fix the error previously made. So when we receive a debit note from a debtor previously rejected, our two accounts involved will be debtors control and bank. They are both classified as assets, and it will have a positive and negative effect of 2,400 Rand. So let's go into that onto our answer sheet. So account to be debited is debtors control. Account to be credited is bank. And it's plus and minus 2,400 Rand in your assets column. Now let's do the second transaction where we correct the error. So the calculation, correction of error, 2,900 Rand minus 2,400 Rand, the difference is 500 Rand. So your two ledger accounts will be debtors control and discount allowed. Debtors control is an asset and it has a positive effect. Discount allowed is an owner's equity and it also has a positive effect. So let's go and record this. Account to be debited is your debtors control account. Account to be credited is your discount allowed account. On the debit side of assets, you will record 500 Rand. And on the credit side of equity, you will record 500 Rand. Number 10. Withdraw an amount of 625 Rand from the bank account to restore the petty cash impressed amount. So your two ledger accounts involved will be petty cash and the other one will be bank. They are both classified as assets. Petty cash will have a positive effect and bank will have a negative effect. And the amount is 625 Rand. So let's go into that onto our answer sheet. So the account to be debited is petty cash. The account to be credited is our bank account. They are both assets. So assets will be debited and credited with 625 Rand. 11. Interest on fixed deposit of 650,000 Rand is outstanding for 2 months at an interest rate of 4.5% per annum. So this transaction will first involve a calculation. We need to calculate our interest on fixed deposit. In order to calculate our interest on fixed deposit, we need our fixed deposit amount, we need our rate, and we need the number of months. So the fixed deposit is 650,000 Rand, the rate is 4.5%, and the months is the last 2 months, so it's 2 over 12, and then we get an answer of 4,875 Rand. Because it's still outstanding, our two ledger accounts will be called accumulated income, and our other ledger account is called interest on fixed deposit. Accumulated income is an asset. Interest on fixed deposit is an owner's equity. Accumulated income has a positive effect on assets, and interest on fixed deposit also has a positive effect on owner's equity. So let's go record this onto our answer sheet. The account to be debited is called accumulated income. The account to be credited is called interest on fixed deposit. Assets will be debited with 4,875. And owner's equity will be credited with 4,875. (1.2.2) Provide 2 internal control measures that should be implemented to ensure proper handling of cash. Well, the first thing you can do is you can make sure there's physical protection against theft by depositing receipts as soon as possible. Another alternative measure you can put in place is compare the bank statement with a cash journal and always make sure that there are separation of duties. 1.2.3 State 4 primary principles of good corporate management as set out in the King 4 report. Well, the first one is always discipline and accountability. Responsible management. To be transparent, so transparency. Independent decision making. Social responsibility. And honest action towards all role players. So, honesty. Exercise 1.3 Required. 1.3.1 Analyze the given transactions according to the correct headings on the answer sheet. Assume that the financial year ends on 28 February 2025. Transactions. Number 1. Sell goods with a cost price of 3,800 Rand on credit to R. Cilliers. A profit margin of 28% on cost price is used throughout. Number 2. Purchase goods on credit from Moray stores, 2,600 Rand. Since we have had a good trading relationship with them for many years, they allow a trade discount of 6% to us. Number 3. A debtor R. Ross is insolvent. His insolvent estate paid us an amount of 1,600 Rand. It has already been recorded correctly and represents a payment of 20 cents in the Rand of his entire debt. Write off the rest as irrecoverable. Number 4. During the calculation of the weekly wages, the deduction of the pension fund of the wage workers was calculated and posted as 10% of the gross wages, instead of 6%. The gross wages for the weeks were 100,000 Rand. The employer does not make any contributions. Correct the error. Number 5. An electronic bank transfer was made to ABSA, 25,200 Rand, to settle the final payment on the loan, as well as interest for the last 5 months at an interest rate of 10% per annum. Number 6. The allowance for bad debts account shows a balance of 1,000 Rand. Outstanding debtors amount to 20,000 Rand. Adjust allowance for bad debts to 6% of debtors. Number 7. Bank fees according to the bank statement. Service fee 400 Rand. Fees on credit card transactions, 100 Rand. Internet banking fees, 150 Rand. And cash handling levy, 150 Rand. Number 8. The bank statement shows a credit in terms of interest, 110 Rand. Number 9. Issue a credit note to S. Daly for goods returned. The profit earned on the sales transaction at a margin of 28% was 182 Rand. Number 10. Make a cash withdrawal at an ATM to restore the petty cash impressed amount, 600 Rand. Number 11. Insurance paid to 31 July 2025 amounts to 87,380 Rand. 1.3.2. Choose the definition or explanation in column B that is the best match to the term in column A. Write only the letter from column B next to the number from column A on the answer sheet. Column A, number 1, King 3 report of 2009. Number 2, internal audit. Number 3, business ethics. Number 4, qualified audit report. Number 5, triple bottom line. Number 6, internal control. Number 7, professional competence. Number 8, unqualified audit report. Number 9, professional behavior. Number 10, King 4 report of 2017. These are the definitions. Now in column B, with which terms do they match? Is it A, the ability to be proficient in your work by having the necessary knowledge, experience, and qualifications? B, means that all statements and information are correct and reliable and that no recommendations or changes are made? C, apply and explain. D, impact of decision making on people, the environment, and the profit of the business. E, monitor whether the control measures that were introduced comply with certain requirements to ensure that the goals will be attained if implemented correctly. F, apply or explain. G, refers to the correct way of doing business. H, entails daily control over implementation of control measures introduced. I, recommendations for changes with regards to the statements since everything is not correct and reliable. And J, no employee should act in such a manner that it would have a negative impact on the image of his profession or the employer. Number 1. Sell goods with a cost price of 3,800 Rand on credit to our sellers. A profit margin of 28% on cost price is used throughout. So when you sell goods on credit, you're going to have two prices involved. You're going to first record your selling price, and then you're going to record your cost price. Now, because this is a credit sale, the two accounts will be debtors control and sales. For the cost price, your two accounts is cost of sales and inventory. But let's first look at our selling price. In this case, our selling price will involve a calculation. To work out our selling price, you need to take your cost price and you add your markup percentage. 3,800 Rand is your cost price given, and your markup percentage is 28% also given. So if you calculate that, you get a selling price of 4,864 Rand. So now that we know our selling price, let's quickly classify the two ledger accounts for the first entry so that we can enter it into our answer sheet. We know that debtors control is an asset. And we know that sales is an owner's equity. Asset will have a positive effect, and owner's equity will also have a positive effect on our accounting equation. So let's go and record the debtor's sales of the selling price onto our worksheet. So the account to be debited is debtor's control. The account to be credited is sales. Assets will be debited with 4,864. and equity will be credited with 4864. Now let's look at the second part. The second part that we need to record is our cost price. We said the two accounts will be cost of sales and inventory. Cost of sales is classified as an owner's equity, and inventory is classified as an asset. They will both affect our accounting equation negatively. Here we don't need to calculate the cost price because it was given to us as 3,800 Rand. So let's go and record this into our answer sheet. So the account to be debited is cost of sales. The account to be credited is our inventory account. Assets will be credited with 3,800 Rand. And equity will be debited with 3,800 Rand. Two, purchase goods on credit from Moray stores, 2,600 Rand. Since we have had a good trading relationship with them for many years, they allow a trade discount of 6% to us. In this instant, it is very important to remember that the only price you record is the price after the trade discount. You do not record the trade discount separately. So we're first going to quickly have to calculate our new reduced price. So the price after the trade discount will be 2,444 Rand. It's simply saying 2,600 minus 6%, or you can say 2,600 times 94%. We are getting a 6% discount, so we're only paying 94% of the purchase price. Now that we've determined our correct price, we have to decide which are our two ledger accounts involved. In this instance, it will be inventory and it will be creditors control because it is a credit purchase. Let's classify both accounts. Inventory is classified as an asset and it will have a positive effect. Creditors control is classified as a liability and it will also have a positive effect as the creditors control account balance is going up because we are now buying more stock on credit, so our liability is increasing. Let's record this onto our answer sheet. The account to be debited was inventory. The account to be credited was creditors control. Assets will be debited with 2,444. And liabilities will be credited with 2,444. Number 3, a debtor or Russ is insolvent. His insolvent estate paid us an amount of 1,600 Rand. It has already been recorded correctly and represents a payment of 20 cents in the rand of his entire debt. Write off the rest as irrecoverable. So in this instance, we only have to do the second part, is writing off the debt that is bad. It will involve a calculation. It's a bit tricky, but not that tricky. First of all, we're going to have to calculate the entire debt that this debtor owed us. So you're going to work backwards. You're going to take 1,600 Rand and you're going to divide that by 20 cents. That gives you an answer of 8,000 Rand. So this debtor owed us 8,000 Rand. Luckily, because of his insolvent estate, we could manage to recover 1,600 Rand. So of the total of 8,000, we received a payment of 1,600 Rand. Now that payment has already been recorded, so we do not need to do an accounting equation for this part. However, the part that we need to write off will be the difference between 8,000 Rand and 1,600 Rand, which is 6,400 Rand. That is the part that we will now record because that is the part that is a bad debt. So the two accounts that we will open is called bad debts and debtors control. Bad debts is an owner's equity and it has a negative effect. Debtors control is an asset, and it also has a negative effect. And the amount is 6,400 Rand. So let's go and record this onto our answer sheet. So the account debited is bad debts. The account credited is debtors control. Assets will have a negative effect of 6,400 Rand, so it will be credited. And equity will have a negative effect of 6,400, so it will be debited. During the calculation of the weekly wages, the deduction of pension fund of the wage workers was calculated and posted as 10% of the gross wages, instead of 6%. The gross wages for the weeks were 100,000 Rand. The employer does not make any contributions. Correct the error. So in this instance, we only need to correct the error, the mistake that was made. So let's quickly go calculate that amount. Our wages for the week totaled 100,000 Rand. We recorded it at 10%, which gives you an answer of 10,000 Rand. But that was wrong. We should only have recorded it at 6%. So 100,000 Rand at 6% gives you 6,000 Rand. So we now need to go rectify the difference between 10 and 6, which is 4,000 Rand. So the two accounts that you will open is called pension fund and creditors for wages. Both of these accounts are liability accounts. So it will have a positive and a negative effect under liabilities. So it will be debited and credited with only the difference, which is 4,000 Rand. So let's go and record that onto our answer sheet. The account to be debited is called pension fund. The account to be credited is called creditors for wages. And you will have 4,000 Rand in the debit column as well as on the credit column of your liabilities.